So a taxable person who is covered under composition levy can neither collect the tax nor be entitled to credit of input tax. Now, if accounting a regular person, you will recognize your output tax liability as a liability. You will recognize your input tax credit as a current asset. You will set off both, and the net liability you will be paying to the government. Composition scheme both the output tax liability as well as the input tax which is not eligible, both will be recorded as an expenditure. Tax collect the moment I collect from some other person, it is some other person's money which I am bound to pay, therefore it is a liability. But now expenditure. Similarly, ITC not direct asset recognize panni na liability oda set off பண்ணுவேன். இங்க ITC benefit இல்லாததுனால inputல இருக்கிற எல்லா ITCயும் I will accumulate to the cost of purchase or the cost of expenditure and show it in P&L account as an expenditure. Otherwise, if it belongs to any asset or if it pertains to any asset, I will add to the cost of asset. Always I have the benefit of depreciation in Income Tax Act to claim. Okay, so how to compute eligibility? This box is given. Please remember it. Next class I will take some questions from the RTP, last 1 or 2 attempts RTP. When this amendment came, they brought in some questions. We look at those questions in the next class. Ascertain the value of supply of goods and whether it is within the threshold limits. Then ascertain whether the value of supply of services is within the specified threshold limit, which is sublimit. Then ascertain whether the combined value is within the overall threshold limits and check whether other conditions are satisfied which are prescribed under section 10 subsection 2. Okay va? You have to compute the eligibility under composition scheme. Now 10 subclause 2A was introduced from 2019, wherein notwithstanding anything to the contrary under this act, a registered person may opt to pay an amount of tax calculated at such rate prescribed in Rule 7, which is 6% GST, 3% CGST plus 3% SGST. Such person who is not eligible to pay composition tax under section 10 subsection 1 or 10 subsection 2, point number 1, and whose aggregate turnover in the preceding financial year did not exceed rupees 50 lakhs. So the main condition for 10(2)A scheme is he shall not be eligible for composition scheme under 10(1), which is he is not a trader, he is not a manufacturer, he is not a restaurant service provider. So any other person, in other words, small service providers. The title is service providers and other suppliers, but commonly this is referred to as small service providers. Okay, conditions to opt for the scheme is very similar to 10 subsection 2. The aggregate turnover cannot exceed rupees 50 lakhs. He is not eligible to pay tax under section 10(1) of the act. He is not engaged in making any supply which is not leviable to tax under the said act. He is not engaged in making any interstate outward supply. He is neither a casual taxable person or a non-resident taxable person. He is not engaged in making any supply of services through an MCOM operator who is required to collect tax at source under section 52, and he is not engaged in any supply of notified goods. Okay, then they are given an explanation on how to compute aggregate turnover in case of first supplies. Okay, how to compute aggregate turnover and how to compute turnover in a state or turnover in a union territory for the purpose of composition levy, from which day you should consider and for which items you should not consider. They are given clearly. Okay, then we'll go into composition rules. Intimation. The first rule is nothing. Intimation by persons registered under Rule 24, which is migration of existing assessees. Any time prior to appointed day or 30 days after the appointed day, they shall file an intimation. In case of intimation of options by persons applying for registration under Rule 8.1, you can directly give it in your registration application itself whether you are opting for composition scheme or not. If so, which composition scheme. Now, if you are an existing registered person, then you have to file an intimation in GST CMP 02. This must be filed prior to the commencement of the financial year for which the option is exercised. For example, next financial year 2022-2023 க்கு நீங்க வந்து composition scheme போக போறீங்கன்னா நீங்க முன்னாடியே by March 31st you should give the option. You should decide and give the option. Then from commencement of the relevant financial year, that is from April 1st 2022, within next 60 days, which is by May 30th or May 31st, you have to file a statement of inputs and capital goods in stock, which is GST ITC 03. Okay, so what is the effective date to pay tax under section 10? This is GST ITC 03. You are giving the what is that stock statement. Okay, with effect from the first day of the month immediately succeeding the month in which CMP2 is filed with the commissioner. So நான் ஏப்ரல் 2022 நான் வந்து பண்றேன் அப்படின்னா நான் வந்து காம்போசிஷன் ஸ்கீம்ல போய்க்கலாம். சிமிலர்லி ரெஜிஸ்ட்ரேஷன்ல பண்றேன் அப்படின்னா பண்ணிக்கலாம். இது வந்து மத்த கேட்டகரிக்கு they are given this form. Okay, then stock details. In the CMP 03 இருக்கு பாத்தீங்களா, இதுல வந்து you have to give all the details of stock including goods received from unregistered person on the day immediately preceding the date from which you opt for the composition scheme. So இப்போ நான் வந்து 1st April 2022 நான் வந்து composition scheme க்கு போக போறேன் அப்படின்னா as on 31st March என்னென்ன ஐட்டம் ஸ்டாக்ல இருக்கோ அது எல்லாத்தையும் I should give as a stock statement to this form. ஏன் அப்படின்னா reversal of ITC ஏதாவது இருக்குன்னா அதை பண்றதுக்காக this should be done. This has an impact in section 18, which is ITC availment in certain special circumstances. And the provision ku idu link agum. Okay, then effective date of an option. So the option shall be effective from the beginning of the financial year where the intimation is filed under Rule 3 subsection 3 for existing assessees. In case of new assessee, the appointed day, that is migration. Okay, then in case of option under Rule 3.2, which is registration application odave file பண்றது வந்து date of grant of registration to the application. Date of grant of registration, or in other words your registration certificate date will be the effective date for this option. Now what are the other conditions? This is to be coupled with 10 subsection 1 or 10 subsection 2a. Okay, he is neither a casual taxable person or an NRTP, which is already given in that section. Now this part is very important. The goods held in stock by him on the appointed day have not been, இது யாருக்குன்னா மெயினா டிரான்சிஷன் பண்றவங்களுக்கு ஆர் நான் டிரான்சிஷன் பண்ணாதவங்களுக்கும் நெக்ஸ்ட் வருது. The goods held in stock by him on the appointed day have not been purchased in the course of interstate trade or imported from outside India or received from his agent or principal outside the state where the option is exercised under Rule 3.1. You cannot purchase goods through an interstate trade. All your purchases and sales must happen within the same state. Then the goods held in stock have not been purchased from an unregistered supplier, and where purchased he pays the tax under section 9 subsection 4. Now this provision is irrelevant because 9 subsection 4 has been completely recast, which we'll see in the reverse charge topic. He shall pay tax under section 9(3) or 9 subsection 4 on inward supply of goods or services or both. RCM is also applicable through the first clause 10 subsection 1, but subject to the provisions of subclause 3 or subclause 4 of section 9. So This is also covered. Then he is not engaged in the manufacture of notified goods in the preceding financial year. Then he shall mention the words composition taxable person not eligible to tax, not eligible to collect tax on supplies at the top of the bill of supply issued by him. Through the invoice rules, a composition dealer cannot issue a tax invoice. Tax invoice can be issued only when you collect a tax. When you don't collect a tax, what you issue is a bill of supply. Then he shall mention the words composition taxable person on every notice or signboard displayed at a prominent place at his principal place of business and at every additional place of business. Okay. One change from the erstwhile state VAT laws is that the registered person who is opted for composition scheme need not file fresh intimation in every year and he can continue under the scheme. நான் வருஷம் அந்த GST CMP 02 ஃபைல் பண்ணணும்னா அவசியம் கிடையாது. ஒரு தடவை பண்ணா போதும். So only in case of withdrawal you will need to come out of the scheme. As long as you are satisfying the conditions of section 10, you can continue under the scheme. So rule 6 subsection 2 and rule 6 sub rule 2 and sub rule 3 speak about withdrawal from composition scheme, when it will apply. One is you voluntarily come out of the scheme. The other is you violate the conditions of section 10 or the rules made thereunder, or you have violated but you still continue under the scheme. Officer finds out that you are not eligible, so he chucks you out of the scheme. Okay, in all these three situations you can, or rather you will be withdrawn from the composition scheme. The relevant rules are given under rule 6(4) and rule 6 sub rule 5(6). Okay, so when you come out of composition scheme, you need to file a stock statement of input, semi-finished goods and finished goods in form GST ITC 01, because by this you are indicating to the officer that I am having so much of items in stock and on which I have paid so much amount of GST as input tax. So I will be eligible to take input tax credit once when I shift to the regular scheme, subject to your rate not restricting ITC eligibility, availability. Okay, then what are the rates of tax under rule 7? In case of a manufacturer other than manufacturer of notified goods you cannot come under the scheme. Okay, half a percentage of turnover in the state or union territory. Then supply of food or drink in a restaurant, composite supply of food or drink in a restaurant, 2.5% of turnover in state or union territory. Then any other supplier who is eligible for composition levy under section 10 subsection 1, example traders which I have given, half a percentage of turnover of taxable supplies of goods or services in the state or UT. Manufacturer ku half a percentage of turnover in the state or union territory. இவங்களுக்கு half a percentage of taxable turnover of goods or services. Okay, suppliers covered under 10 subsection 2A, 3% of the turnover in state or UT. இது வந்து supplier of services. Now இது எல்லாத்துக்குமே CGST ஆக்ட்ல இன்னொன்னு இருக்கு. இங்க 0.5%, அங்க 0.5%, இங்க 2.5%, அங்க 2.5%, இங்க 3%, அங்க 3%. So ரெண்டுத்தையும் சேர்த்தா மட்டும்தான் GST rate. So இங்க கொடுத்திருக்கிற rate is rate of CGST. Okay, rate of tax I have given in bracket as CGST. You have to include another column, rate of tax SGST. Half a percentage, 2.5%, half a percentage and 3% again. இது அப்படியே அங்க காப்பி பண்ணும். So effectively manufacturers 1% of turnover in the state or union territory, restaurant suppliers 5% of turnover in the state or union territory, traders 0.5% of taxable turnover of taxable supplies of goods or services in the state or union territory, suppliers 0.5% plus 0.5%, which is 1%. Then small service providers under 10(2A 6% of turnover in state or union territory. IGST concept varave varadu in composition scheme. There was one book where they were given as IGST, 6% IGST for this one. IGST varave varadu for section 10, please remember. Okay, so turnover in state or turnover means aggregate value of all taxable supplies, exempt supplies made within the state or union territory by taxable person, export of goods or services or both, and interstate supplies of goods or services or both made from the state or union territory by the taxable person but excludes the GST portion and the supply subject to reverse charge GST. Okay va? Turnover kaga ellathiyum consider pannipanga, but ana taxation will happen only on your taxable intrastate supplies. Siladhukku vandu entire turnover will be considered for your taxation. Okay va? But technically matta conditions um paakanum. Enadhu நீங்க interstate supply பண்ணக்கூடாது அதெல்லாமும் பார்க்கணும். So the definition is broad. You can only make intrastate supply as long as you are continuing under composition scheme. Is that clear?